Everyone, and thank you for joining. I'm excited to be presenting along with Joey and Brad on protecting profitability, tactics to prevent margin fade. And we're thrilled to introduce you to our experts, Joey and Brad, with extensive background as CPAs and a wealth of experience in process automation, optimization, audit, and they have served as CFOs in large commercial construction companies. They bring a unique blend of financial expertise and industry insights to today's discussion. And so what I want to say is throughout this webinar, Joey and Brad will share their knowledge and practical strategies to help you safeguard your project profitability, avoid margin fade, and navigate the financial intricacies of commercial construction. Before we get started, I thought that I'll just take a moment and pass it over to Joey and Brad so they can do their introductions.
Hey, well, thank you, Bruce. Good afternoon, everybody. My name is Joey Ward. Brad and I recently formed Ward and Robinson to consult with construction contractors. Brad was recently a CFO, and I was recently U.S. head of construction for a major accounting firm. So this unique complement, along with our combined 60 years of experience, allows us to tackle an array of different project types and help our clients with specific expertise for a limited amount of time. We do things like transaction advisory, technical accounting assistance, process assistance, management letter consulting, treasury and surety consulting, and so forth. And so we're very happy to be with you today. Thank you for having us.
Absolutely. I appreciate that. So whether you are a seasoned industry professional or new to the world of construction, protecting profitability promises to deliver valuable insights, actionable advice, and a roadmap to ensure that you are basically doing what we focus on here at ProNovos, protecting your profits and protecting your cash flow. So with that said, I guess, how about we get into it? Let's see. So, this slide, I know you and I, we all have had great discussions about creating the right culture and team involvement. So Joey or Brad, I'd love to hear you guys talk a little bit about this and how you see it.
Absolutely. Thank you, Bruce. As we started putting the slides together for this whole presentation, one topic popped out that was pervasive, and it was tone at the top. And so we felt it important to start here. Having senior management and particularly operations senior management involved in project profitability is paramount to success. I kind of liken it to the two eyes of a successful process: involvement and incentive. And so having involvement of senior management in the project profitability process at the most granular level can create the right culture to mitigate profit fade. And then on the incentive side, if you look at this slide, we've shared a number of things here, but one concept sticks out to me, and that's accountability. I think, the importance to the organization is shown through the accountability structure when it comes to project profitability. So having said that, we can move on to the next slide with Brad.
All right.
Good afternoon, everyone. Happy to be here as well. So just to kind of get into a little bit of detail of the importance of forecasting and the job cost schedule. Anyone who operates a construction company certainly knows the importance of cost drivers in the business and why that's so important for profitability. Oftentimes as a CFO, I would struggle with getting my team to understand at the same level I did, because obviously I could see the financial impact and they generally were running the business. So a few things that we talked about that we'd want to share with you today, the absolute paramount importance of getting cost into your systems as timely as possible. As soon as those costs are certain and can be forecasted, they need to be in your WIP schedule. Oftentimes, I worked for a fairly large specialty contractor CFO for almost 4 years, and we had a lot of small, a volume of jobs, but the jobs were short in duration. And inevitably, we would close out a job, recognize the profit, and then the next month there would be a bill that would come in that we'd have to open up the job and take the cost for, or add the cost to another job that would impact that project. Sometimes those can't be avoided, but if your forecasting model is robust enough, generally you can capture most of those, which brings me into the third point, just the overall robustness of the job cost data. It's really important that as a contractor, you have your costs classified in such a way that they are specifically direct costs or maybe indirect costs of your job, cost of your job, separate from just regular overhead costs, which seems pretty basic at the top level. But I know a lot of contractors, particularly those emerging, don't necessarily have a level of detail and granularity in their cost codes that make forecasting job cost as efficient and effective as it could be. Sorry.
You know, Brad, I wanted to just add, I think forecasting job cost is such a art and science, and one of the things at ProNovos that we try to do is make it as easy as possible. You know, typically when you're forecasting job costs, I'm sure that you might agree with this, but it's relatively easy to tell you what the cost, how much the bucket of cost is going to be at the end of the job. But one of the things that I often see contractors not doing is scheduling when they think the cost may happen from month to month. And at ProNovos, we try to make that really easy. So for our clients that use our projected final cost, you'll see a timeline version and when you can start projecting the cost on a monthly level. I also think that this might be a good time to launch a poll question. We just would love to hear from you to understand the type of contractor you are. I think that it'll help sort of gear this conversation as well. And see a fair amount of people responding here. We got quite a few specialty contractors and some GCs. And while we wait on that, one thing that I want to add to this, Brad and Joey, is it seems like incorporating these factors into your cost management strategy, it can significantly impact the success of your projects and the overall financial health of the company. And I think you did a great job. This slide underscores that. Is that pretty much the takeaway here? That
absolutely, it's, you know, it's the better a job is forecasted and monitored, the more accurate the profitability on the project is, as a rule of thumb. And that has nothing to do if you're a specialty contractor, a general contractor, a large or small. I've worked for large general contractors and a small specialty contractor. The WIP schedule works the same. It's a matter of accuracy and timeliness. Absolutely.
Got it. All right. Well, looks like we have quite a few GCs and specialties on the call today. So now we can move over to the WIP and management.
Okay, so carrying on from the previous slide, so inevitably in every contractor's experience, there are going to be instances where profit fade occurs. So that the idea is to try to anticipate what jobs you might incur profit fade on, and then what to do about that particularly before a reporting deadline. Month to month, it's not necessarily as big of an issue, but obviously at the end of your reporting period, before you turn your financials over to your outside accountant, it's critical, because one of the first things they're going to do is do a look back calculation to see how well you forecasted those jobs. So the response time, so the longer you have to respond, the more time you have to adjust your profit margins to correctly reflect what profit on the job will be, or mitigate a loss if that's the case. Secondly, WIP reviews. I personally am a big believer in monthly WIP reviews. I know some of my CFO colleagues think that's too often. We had my experience was we had a company, one of the companies had 200 jobs, and we would spend a day to a day and a half doing WIP reviews, but it was absolutely critically it was critical for us to do these because, again, we had a high volume of very short duration jobs, and it only would take a few to throw off the overall revenue for that month. And then going on to the next bullet point, it's critically important that you have buy-in from the senior management. We've already talked about tone at the top, but senior management of operations of your business. The project managers and project teams need to see their managers and bosses in those WIP meetings because they need to understand the importance of that forecasting. A lot of times, a lot of ops people would just see this as a mechanical exercise and accounting work that's not necessary in order to build whatever you're constructing. I found that incentivizing people to show them the importance, particularly contractors that build their bonus structures into accuracy, giving some flexibility, obviously, around the fact that they're not going to be completely accurate, but giving your project team some incentive for accuracy and showing them how important it is the amount that you invest and maybe additional bonuses will more than pay for itself in the accuracy of your financial statements. And
that's interesting. I'm kind of curious, you talk about the frequency in which you have these management reviews, and in your experience, have you seen some obviously some best practices when conducting these management reviews, or are all of them sort of the same?
My experience has been, yes, best practices, both the leveraging technology is obviously something that makes the investment that you as a contractor can make in technology will more than pay for itself on an ROI basis. I've seen a lot of companies use Excel, for example, for their WIP, or they'll use, like I noticed that several of you are Sage 300 CRE users, which I used at my last employer. And we would dump our WIP schedule into Excel and manipulate in Excel, which is not the most efficient way to do it, but it worked. I think what it allowed us to do from a best practices perspective, again, is having people in the room, asking the questions like, we've been running a profit margin of 12% on this job. Why is it 18% this month? Or why is it 4% this month? And invariably, it goes back to the previous slide where I discussed cost being accrued for and managed appropriately in the context of the overall job. So getting people in the room and having a focused conversation on the things that drive the profitability of the job will more than pay them for themselves down the road when you're ready to close out your year in terms of preventing profit fade.
So I love hearing that, and what you just called out around Excel and using Excel to make annotations within the job review meeting was something that we had in mind when we built our WIP management. Within ProNovos, we wanted you to be able to have these job reviews and capture that insight, see if you had some type of margin change, and just be able to again use technology to better run these meetings. And we do have a question if you're open to accepting questions.
So it depends on the question, but we'll give it a go.
What is the best way to help change tone at the top if they are all not aligned?
Wow. Joey, you want to take that one, or do you want me to?
No, I've seen it both ways. You've got a very distant and non-cooperative team, or you've got a very fluid team, and so it just is. It will take time, and there can be some commonalities. You can find some common ground to bring everybody together. That's a tough situation, and getting everybody rowing in the same direction sometimes is the biggest issue that you'll have. And so I don't envy you, but again, just trying to find some common ground, showing that there can be solutions by getting everybody together.
And I would just add to that real quickly. I think it's also not a bad idea to be as transparent with your people as you can. You might not want to show them your full set of financial statements. You might not want, particularly if you have like say bonus plans or things on the balance sheet that you wouldn't necessarily want to disclose. Those can be collapsed into a condensed P&L, a condensed balance sheet. And you show people the work that you're doing in these reviews, the focus that you're giving is driving the profitability in the organization. And I keep going back to this bonus thing, but there's a lot of truth to what gets measured gets done. And when people can see, hey, if we hit our target of X, this is going to mean more to me. It is amazing what happens about culture, tone at the top, all of the things that you think that might be a little bit of a challenge internally can be mitigated very quickly if people think that they have a financial incentive to participate. They don't necessarily like it. It's not their thing. They're not finance people, and I get it. But if they think they're going to be able to buy that new car at the end of the year, they might, spend a little bit more time on it. We put a plan in place at my last employer, and it is amazing how it changed the culture in the organization. I had operations people asking if they could participate in WIP meetings, believe it or not.
Brad, we have another question. I think this might be specifically for you. This is from a good friend of mine, Casey Dillon. He wants to, let's see, I'll read it. Love to hear more about the incentive of accuracy in the WIP forecast.
Yeah, so basically, and I may have not said that exactly correctly. It really what you want. I mean, I look at forecasting like any kind of forecasting, like the weather forecast, so I tell people jokingly, weather people are the only ones that can be wrong 97% of the time and keep their job. I mean, hopefully we're better than that. But I think the incentive would need to be on the profitability of the business, which is driven by the WIP schedule. So linking the accuracy of the WIP schedule and saying, hey, we have to be certain percentage accurate based on incentives, it probably wouldn't necessarily work because there are a lot of things that are outside of the company's control. There's weather delays. Maybe you have if you're a general contractor or subcontractor default, or a second tier contractor maybe has a bond claim. It could be any number of things, right? But I think if you set targets based on the profitability of the company, which is driven by the WIP schedule, it's the linkage between the two. Now, anybody can say, hey, if we make X amount of money, we'll pay Y. But when the operations people understand that the WIP schedule drives that top line of revenue, and you create that linkage between the two, then generally there's a lot more interest in the nuts and bolts of the WIP schedule because they know what the end result might be.
Makes sense. Keep the questions coming. I know we have a short amount of time here, so if you're okay, I'll go to the next slide.
All right, so let's pull back from the project level and look at aggregate causes. And this is one of my favorite areas. This is the why. So why did it happen? And we've got some listed here. So let's say you got a series of projects and you've got profit fade. Is there something consistent among them that you can pinpoint and identify and at least have an area to focus? This is your area of challenge, whether it's a specific project manager, maybe you're operating in a geographic region where there's a lot of profitability fade. You've got a recurring owner, same situation. You're operating outside of your normal industry. You're doing a healthcare job and it's your first one, or you've never made money in healthcare before, but you continue to bid on healthcare work. What are those detectable patterns of causes? What's the why behind the series of projects that you can identify together that is the root cause of the problem? And so with that, Bruce, we can move on to the next slide.
All right. Here we go.
Yep. Which is, when you do have profit fade or anticipated profit fade, how do you correct it? And I would almost argue that you could eliminate a lot of these at the beginning during the bid stage. Look at it like a surety would look at it. If you're a school builder and you're trying to build a hospital 4 states over with an average profit of 14%, is that realistic? Is that something you should stop and say, wait, at the bid stage, let's stop here. But this slide has some course corrections on it. As we all know, getting the right person to approve the change order in a timely fashion is always a consistent theme across profit fade. We've talked about number 2, the oversight of ops and management. Again, number 3 goes back to the slide that we just had. What is that problem? What is that issue across several jobs that could be identified and corrected? And then just having robust discussions with your owners, your subcontractors, using this knowledge in your bids, and going back to what we've talked about on the slides that Brad covered, the data usefulness. Do you have good data, timely data, and what's it telling you? And are you acting on what it's telling you? So, Bruce, I will turn it back over to you.
Yeah, well, we do have another question. And so this question is, how do you handle cost accruals for a large volume of jobs? They currently have 200 running jobs. So how do you handle cost accruals for those jobs?
I can tell you how we did it. So I think I told you the specialty subcontractor that I work for had about the same, around 200 running jobs. We were using Excel, not the most efficient way to do it. And this will be interesting to get Bruce's perspective here to see maybe a tie-in from a technology perspective. But the way we would handle cost accruals is looking in the job reviews, looking at the profitability of those jobs and looking for inconsistency from period to period. And then also looking at the forecast or cost forecast, challenging the forecast for those costs, and then seeing if there's anything that's come in from a timing perspective that happened that should have been accrued in the previous period that we're cutting off. So for example, maybe an invoice comes in on, I don't know, October the 8th, but it was for work that was done in September, which would need to be accrued back. It was much more of a manual process than I wanted it to be. And with that number of jobs, undoubtedly, Mark, you've probably got the same challenge I had in making sure that you captured everything and then doing it at a time that you can get those costs in to run it through your financial statements to capture the profitability associated with that cost. So I would have loved to have had a more I guess robust way to capture it when I was a CFO. But we just found that going through each individual job and looking at the profitability individually was the best way to do it. And undoubtedly, if you have an ERP system or a system like ProNovos that can show you that information and show you the forecast of cost, you should be able to marry that up to capturing that volume that you have and get those accruals done before you close the books each month would be my guess.
Yeah,
Joey, you have anything to add to that? I'm sorry, Bruce.
No. How about Joey? Anything that you'd like to add?
I don't have anything on that one, no.
Yeah. So I think that one of the things that really stuck out for me was the detectable patterns. And I would say that this is the previous slide that we were looking at. It's kind of interesting because in the course of project execution, I know that the primary focus is just to get the job done. But from a data perspective, and I'll raise my hand, I'm a data guy. I think that what we're doing at ProNovos is we're always trying to identify ways of allowing you to capture data so that you can understand what these patterns are. Patterns are easier to identify when you're able to see them in a visual perspective. So by identifying and analyzing these, and I think the operable word is detectable patterns of causes, you can make data-driven decisions that will optimize your resource allocation. It'll enhance your project management strategies and ultimately contributing to the growth and success of your company. So for all of you all that are using ProNovos, I would definitely say try to get more of your PMs to use the projected final cost, where we can detect the problems once you start recording transactions. And then, this whole course correction, this is again where the data, if you are able to see the data from a course correction perspective, you can start putting strategies in place to get ahead of any problems that might exist. So I think that this was a very insightful sort of intro webinar here. I think that Brad and Joey, you guys are very seasoned individuals that are smart, and I know we're starting to do a lot more work together. So if you want to contact them, I think their info is on the slide here. And I don't know if you have any closing thoughts or comments.
I would just say, be kind to yourself with WIP schedules. It is much more art than science, and engagement, some of the things that we've talked about, engagement of your team, particularly operations, and particularly helping them understand what those nuances might be, would certainly help you in the long run.
I agree with that. And I think, Brad hit on it. The dynamic between finance and operations is critical in this whole process.
Absolutely.
Well, I'm not going to let you get off the hook yet. We got one more question, and this is, I think, might be for me, but if you have any insight that you can add to it, please do so. So the question is, I have heard of companies using an algorithm to reduce the total amount of projects to review in a month. If one could reduce 150 jobs down to the top 10 and bottom 10 that need extra effort, the question is, could ProNovos help us build something along those lines? Assumes managers would do all jobs, but leadership may only need to dive into 20% of them. So going back to that question, if you have 200 jobs, it would be very difficult to go through all of these jobs. And I think the question is, could we identify the top 10 jobs or percentage that management could focus on? The question is absolutely, ProNovos can help with that. That is what we do. And I think there's a criteria that we would have to specify to say, this algorithm is influenced by X, and that will ensure that those top jobs are showing up. And I also want to ask you, Brad, 200 jobs is a lot. You said quick turnaround, so I assume that some of them were time and material, but surely you weren't going over 200 jobs. Well, you said a day and a half, but
they were all time and material, so that made it a little bit. So I say that we probably had maybe a half dozen that were fixed price, but just the nature of it was a scaffolding contractor, and the nature of the business is time and material. And so it was really just a basic markup on cost, so you could go pretty fast. But there were still opportunities for efficiency it could have been implemented there. And I like a great question about the top and the bottom. I mean, the only thing as far as doing a deep dive, making the decision on what those are, could be a challenge, because inevitably the one that goes south will be the one that you didn't review, and somebody in operations is going to say, why didn't you review that one? Right? So so you'd have to have a comfort level as the senior finance manager that you were comfortable with whatever you came up with, and had some kind of backfill for the ones that, I understand they're all of them are being reviewed to some degree, but I mean, I would want to know, in case I got asked the question, because invariably somebody would say, why didn't you tell me about that one? But I like it. I like the idea, because it's much more focused and efficient. And, the idea is accuracy in that WIP schedule without any surprises.
Absolutely. Well, thanks for the question. We have an upcoming webinar, Tech-Driven Transformations, Modernizing Construction Operations. This is with our COO, Samantha Lake, and Jason King of Mills in Nebraska on November 7th. So please join us. And again, I appreciate your time. I wish you all a fabulous afternoon and the rest of the week. Thanks again, everyone.